Hi, this is Kerry Artak with Artak Advisory, and this is the AgriTalk video supplement for Monday's show, August 23rd, in which I cover three markets: November soybeans, October live cattle, and October crude oil. Before I jump into the charts, I just want to encourage you to take my work for a 2-week free trial test drive. No credit cards, no deep personal information. I just need a name, an email address, of course, and ideally a phone number. You'll get the work uninterrupted for 2 full weeks. I do call early in the free trial to see if there are any questions. We can talk about your hedging, your trading needs. If you're a farmer or a rancher, we can talk about your production and what your concerns are and where you may make your sales, where you may set your hedges, so forth and so on. And the actual subscription itself is just a short-term commitment. You can go month to month. So if you were to subscribe for a month or two, you can suspend that subscription at any time. I don't follow up with lots of sales calls. A lot of people are reluctant to fill out free trial forms because they're afraid they're going to be put into this never-ending loop of follow-up emails and phone calls, and that's just not my style. Anyway, let's jump into the charts. We'll take a look at the soybean chart itself, the weekly continuation chart. This is the stringing together of previous lead contract soybean contracts. Prior to November, it was, July and so forth and so on. Anyway, I can back up a little bit and just remind you that in November, we had a long-term buy signal. When we settled above this formation, 1128.5, I was pointing to 1651.25 as a 5 to 8 month target at the time. It took about 6 months to realize it. 1651.25, this long-term channel top, able to contain annual buying pressures as it has thus far. On the way down, there was a trend-defining rising 1/3 speed line, trend-defining in sort of the midterm intermediate sense. At the time, I was telling subscribers to buy this speed line. At that time, it was in the 1390s, low 1400 area, in anticipation of a bounce from here back to 1651.25, perhaps. That didn't happen. In the middle of June, we settled below this speed line. It is now our ceiling of resistance through the rest of the year. And following that settlement in June below the speed line, I maintain a 3 to 5 month downside target back to 1128.5. So that remains at play. Now, let's take a look at the November chart itself. This is the November contract weekly chart. We do have an intermediate channel structure here this week at 1288.75. We broke below it last week by a bit and even a bit this Monday morning, but we have not settled below it either on a daily or certainly a weekly basis. 1288.75, an intermediate floor of support, a pivot point, if you will, between that 1459.75 long-term speed line and the 1128.5 downside 3 to 5 month objective. So holding above 1288.75 does allow this market to continue to consolidate in a two-sided framework and perhaps even rally over the next month or two into the 1450s or the 1459.75 speed line, where we can top out, as I say, through the rest of the year, and below which the market remains heavy, anticipating 1128.5. Now, if we close the week, or any day really, but certainly the week Friday below 1288.75, then we have bearish continuation, probably within the order of 3 to 5 weeks. By the end of September, we could certainly test this 1128.5 target, 1128.5 long-term support, able to contain selling through next year. Once tested, this market can turn back up to the 1651.25 channel top by next summer, perhaps. Let's move on to live cattle. Live cattle strong this morning. And so what I say about live cattle is we are, in fact, it may be better actually to show you the daily chart. Sorry, that's wrong. The daily chart. We settled above, or we're actually pushed through this 130.45 level. 130.45. This arrow should be moved, but this is 130.45 right here. 130.45 is also found on the weekly chart. It's the 2019 high. So we've pushed through it, and holding above 130.45, closing above 130.45 should actually yield this 134.92 long-term channel top in the weekly chart. What's the bottom line here? 134.92 long-term resistance, likely to be tested over the next 2 to 3 weeks. So long as we settle today above 130.45, it becomes a 2 to 3 week target. 134.92, able to contain buying well into next year. From here, the market can fall back to a channel bottom that is presently at 115.67. This is a very dynamic channel bottom. In other words, every time we put out a new high, this channel bottom gets reconstructed. So it could climb into the 116, 117 handles as we test 134.92, presumably over the next couple of weeks. In any event, the mid to upper 110s, solid midterm support if tested over the coming months, able to contain selling through winter, and a significant downside tipping point into later next year. We're not anywhere near that right now. I'm just giving you the big picture. If we close above 134.92 at the end of any week, at the end of this week, it is dropping weekly, by the way, which is why you should take advantage of that 2-week free trial, because I will apprise you of its exact location as we move through time. 134.92, if settled above, significant long-term buy signal for the broader live cattle market. I then envision bullish continuation over the next full year into the lower 170s again, where we retest that 172.75 high from 2014. Until then, we can fall back from 134.92 well into next year. This chart, I'm going to actually update it just a little bit and just show that this is at 124.17. I'm going to modify it as we speak. Sorry about all this. But I just need to be exact about these numbers because that channel structure that I just showed has been violated. So 124.17. So what am I saying here? The actual October contract itself has solid support at 124.17. And I've been telling subscribers that holding above this channel bottom will keep this 134.92 long-term channel top I mentioned a moment ago in reach by October expiration. And having actually settled today, presumably above 130.45, we should once again reach 134.92 over the next 2 or 3 weeks. Now, going back to 124.17, I don't expect it this week, but if over the coming weeks we settle below this rising channel bottom, then this, and this is no longer valid either. My analysis is very dynamic, by the way. I'm not a Fibonacci guy. I don't have static numbers. I follow these markets. I am constantly redrawing these formations as we move through time. These channel bottoms and channel structures, speed lines need to be redrawn, so forth and so on. So closing below 124.17, then we have once again 115.67 as really kind of a 1 to 2 month target, and this is our base of midterm support. Throwing a lot of numbers at you, but with regard to the broader live cattle market, holding above 124.17 October contract, 134.92 in reach by October expiration, now 2 to 3 weeks as we settle above 130.45. And this 134.92 able to contain buying well into next year and a significant upside tipping point well into next year. Finally, the broader crude oil market, presently the October contract. If you've been listening to the show, you know, back in the early summer, I had the 76 handle as long-term resistance, able to contain buying through the year. That channel top this week is at 75.01, well above the market. We have fallen off this ceiling. We're now testing an intermediate floor at 63.42, and there's actually more going on down here. The weekly chart for the October contract. October is the present lead contract. 61.90 is our channel bottom this week based on activity from the COVID low. The low so far this morning, 61.74. We broke below it by about 16 cents. It is a significant support level, able to absorb selling through September into October. From here, this market, the crude oil market, can rally back to 75.01 over the next month or two, holding above 61.90. So 61.90 floor of support, holding above it allows this market to recover back into the 75.01 area. 75.01 is roughly here. 75.02. We can climb back here, by the end of October or sooner, holding above 61.90. But because this 75.01 is such a long-term resistance area, able to contain buying well into next year, a closing below 61.90 at the end of this week, or this formation rising through time at the end of any week, wouldn't be a big surprise for me. I would then expect another 3 to 5 months bearish continuation into the upper 40s, 47, 41. There's all kinds of things going on in the upper 40s. Becomes a viable 3 to 5 month target if we close below 61.90, or this formation at the end of any week, rising weekly. And I think that is really all that needs to be said for this particular, this particular AgriTalk video supplement for Monday's show, August 23rd.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You have nothing to lose and much to gain.